Good morning and welcome to our webinar today on R&D tax relief and patent box from Mitchell Charlesworth side of things, from information about patents from Appleyard Lees, and some finance options in relation to R&D from Bathgate. Just a little bit of housekeeping to start with. If you can't hear me through your computer or audio, there are options to log on via your telephone. You've got the number and the access code on screen at the moment. Apologies for any technology issues during the webinar. We should be all up to date now, 10 months in, but we apologise in advance if we do have any issues. Feel free to ask any questions. That can be done via the chat function within the webinar. Please just put on who you're directing your question to. It just makes it easier for us to go through at the end with you. All the speakers' contact details will be up on screen throughout the at some points during the webinar. Please contact them directly if you have a specific question. We're more than willing to help. And this is going to be recorded and circulated along with the slides after the webinar, so you can access it again if you need to. So I'm Phil Hartley. I'm one of the corporate tax managers at Mitchell Charlesworth with a specialism in R&D. Assisted our clients in saving 2.1 million in R&D tax relief in the last year, along with patent box. So today my focus is to give you a bit of an update on R&D and patent box and how it can benefit your business. Delighted to be joined by Kate Hickinson at Appleyard Lees, who's going to talk us through some of the finer details of a patent and how you go about obtaining a patent to support the patent box tax relief claim. And delighted to be joined by Ian Adams and Paul Trickett at Bathgate Finance, who are going to talk through some of the products available on R&D in particular. So to start off with, I'm going to talk to you about what is R&D tax relief, who's claiming the relief, and what costs you can claim as part of that. And then I'm going to talk about a bit about patent box tax relief and how does that work. Not as straightforward and as simple in certain instances as R&D tax relief, but just give you a bit of an overview so you can have a think about if you've got anything potentially that qualifies or if you're thinking of obtaining patents in the future. And I'm going to round off with just some case studies, a couple of our clients that we've worked with where we've claimed both R&D and patent box, just to demonstrate how it can be quite beneficial to the business. So R&D, from a HMRC point of view, is what takes place when an advance is sought in either in science and or technology, and the activities that are undertaken directly contribute to resolving a scientific or technological uncertainty. Quite complicated and not really easy to understand, and a lot of people think actually that's just your white coats and your technological wizards on claiming this and only this. So what I try and do is just bring that down to a layman's example here. What is advance in science and technology? Well, it could be something new that you've implemented, something new to the industry, or something that you've improved in the industry, and that can be a product, a process, or a system. Or it could be an improvement to an existing product, process, or system. It doesn't necessarily have to just be new to the industry. If it's new to yourselves, but it wasn't readily known within the industry how to achieve it, or somebody else has achieved it, but you can't just knock on their door and find out, that would also be classed as an advance in science and technology. An uncertainty in science and technology, it's really a problem. What problem did you have in achieving the advance? And how easy was that to resolve? So in brackets there, you've got a competent professional. So your team will have many competent professionals in it. If they knew how to resolve that problem quite easily, then we don't have an R&D claim, because you have to have a problem to achieve the advance. And I've put readily deducible, so I couldn't just log on online and find out how to do this. I had to spend time researching various materials, undertaking trials, undertaking designs to achieve the end goal. So just as a bit of an example, I tend to use my mobile phone. So I have an iPhone, and Apple tend to be the market leaders in this sector. They are always bringing out new and improved mobiles, each with a new technological advance, and assuming they'll have quite a few problems to overcome to achieve that advance. So that in its own right would qualify as R&D in the UK. But you've got Samsung, Google, Huawei, Microsoft, etc., who all do a very similar product but they can't just knock on Apple's door and ask them what to do. They have to do their own development of the product to get to an end product that looks very similar, but they've had to develop themselves. So if Samsung, Google, and Huawei were in the UK, they could also claim R&D in the UK on those activities. It doesn't, what I'm trying to get across here is it doesn't have to be brand spanking new, something that's never been seen in the industry before. It can be seen in the industry, but it wasn't readily known how you could achieve it. And you've had to therefore invest time and effort to achieve the problems that were prevalent in the project. So this slide is just a bit of information really as to who is claiming R&D tax relief. HMRC provides us with stats every year to say who's claiming it and how much they are claiming. So you've got your big three, the ones you would expect to be claiming it: your manufacturing, your information and communication, and your professional scientific services. But what I find quite interesting about this slide is the other sectors that are claiming. You know, construction are decent claimers, wholesale and retail trade are decent claimers. You've got admin and support services are decent claimers as well as agriculture, education, health and social work. These are all various different sectors that you wouldn't expect to see R&D in if you've got a view of it's your scientific knowledge and your technological wizards. These are business who are having to overcome problems and try and achieve new things to stay competitive. And that's quite key with R&D tax relief. So in terms of costs, what costs qualify is the question here. And there's four main categories that we need to consider. Your biggest one by far is staff costs. It's the time that staff have spent on R&D activities and that the company is paying for. And this includes the salary, the employer's national insurance, and the employer's pension contributions. You can also claim third-party costs. So, for example, you may use an IT specialist to help deliver a particular project. Their costs would potentially qualify, but they've got to go under a similar competent professional test that I mentioned earlier. They'd have to have spent the time and effort, and they wouldn't have known how to achieve what you wanted from the outset. In particular to manufacturing, but if you're preparing prototypes, for example, the material costs there, or the wasted material costs because a certain design has failed, that would qualify for the relief. And then a general section called consumables. So this can, for example, include software that's been bought specifically for R&D activities, travel associated with R&D. You can claim a bit of light and heat for the premises that's associated with R&D. They're classed as consumables, so not directly involved in the R&D, but incurred as a result of the R&D. So the big question with R&D, what's the benefit in claiming? So in the UK, we've got two schemes of R&D. We've got the SME scheme and we've got something called the RDEC scheme. And in the main, it's depending on how big your company is or the group of companies is as to which scheme you fall under. An SME, for this purpose, is classed as a company or a group of companies that has got less than 500 staff and a turnover of under 100 million euros or a balance sheet total under 86 million euros. So these are currently based on EU law, and there's nothing in the pipeline at the minute to change those definitions. If you're below that, you class as SME, and I'll explain what the relief is on SME in a moment. Over that, or you've received any notifiable state aid, so grants in relation to R&D activities, then you fall under the RDEC scheme. So what's the benefit? So there's a few different examples here. We've got a profit-making SME. And for all these examples, I'm going to use a 100 grand identified R&D spend. And it will work out as an additional 24.7 in the pound in tax relief for R&D. So the company has spent 100 grand on R&D, and then they've got £19,000 tax relief straight away. That's because that is identified as an allowable deduction for corporation tax and reducing the profit subject to corporation tax. The way that the R&D SME scheme works is that for every £1 you identify as R&D, you get an extra £1.30 as a tax deduction. So in my scenario, you get an extra £130,000 to reduce the profits. And at 19%, that's £24,700 in tax relief. With R&D, we can look backwards first. So if we took a February year-end company, for example, we could look at the February 2019 year-end and the February 2020 year-end before looking forward. In that scenario, that would result in a repayment of tax from HMRC. Or if we're looking forwards, it would work more as a tax reducer. So in this instance, we would reduce the tax by £24,700. So the total tax relief you've received on this R&D spend is £43,700. So nearly half of your spend has been covered by reducing your tax bill overall. So quite a lucrative relief in that sense. And it's only potentially better for a loss-making SME. So what HMRC say with the loss-making SME is that, okay, you've made this loss because, or taxable loss, because of R&D, you could carry those losses forward and achieve the relief we just talked about in the future. But actually, a lot of these SMEs need the cash now to support their R&D activities and to fund further growth of their R&D. So you can exchange the loss for a cash credit. So using the same example before, you exchange the lower of the R&D spend for tax purposes, which is the 100 grand plus the 130,000 extra. So that's being £230,000, or the taxable loss for a cash credit of 14.5%. So I'm just going to assume for ease that the lower figure is 230,000, and this provides a payable cash credit of 33,350 quid. So, and the initial 100 grand spend has brought back in 33,350 quid. And that's paid cash, that's refunded cash by HMRC. There is instances where they will offset that credit against other outstanding tax liabilities. For example, pay as you earn. They're not at the minute doing that against VAT because of the complexities with the deferment. But we've seen it recently with the outstanding pay as you earn liabilities. But in the main, that should hopefully be received back as cash into the company's bank account. RDEC is slightly different. So the RDEC, official RDEC rate is 13%, but the actual net benefit of a claim is 10.53p for every £1 spent on R&D. And that's because you bring in the 13% credit as taxable income, subject to corporation tax, and then you work out what the cash repayment would be. So in my example of 100 grand spend, this would generate a 13 grand credit on the corporation tax computation, subject to corporation tax at 19p. The net effect of that is that a cash repayment of £10,530 will be due back to the company, unless there are other tax liabilities outstanding. So if there's other tax liabilities outstanding, the process for RDEC is they have to be offset first before you can claim that money back. With the SMA scheme, it's within HMRC's discretion. So during the early stages of the pandemic, HMRC weren't offsetting the tax on the SME side of things against any other outstanding taxes. They're trying to pay it out to companies as soon as they possibly could. With RDEC, they don't have a choice. It's law that it has to be offset against other tax liabilities. So a little bit on patent box tax relief now. And what is it? So it's a relief that's designed to reward companies that keep and commercialise intellectual property in the UK. So they've developed a product or developed a particular software or a particular machine, etc., in the UK, and they are keeping it in the UK to sell to the masses. And so you can utilise patent box tax relief if the following conditions are met. Firstly, you've got to be liable to corporation tax. You've got to have made a profit. This is a tax relief that ultimately reduces profits associated with patents. So you've got to be liable to corporation tax, and you've got to have made a profit from exploiting patented inventions. You've got to own or have exclusively licensed in the patent, and you've got to have undertaken qualifying developments on the patents, i.e. you've got to have undertaken R&D on the patented invention. The claim is made via its corporation tax return, and it's important to know it's not just UK patents, and I know Kate's going to just touch on this in a bit more detail shortly, but it also includes patents from the EU and other countries as well. So how does the relief work? Well, the headline grabber for Patent Box tax relief is that it provides a 10% corporation tax rate on the profits that have been derived as a result of the patent invention. However, when you see a corporation tax return in it, you don't know for sure how much, you don't know for sure if it's 10% because it won't show a 10% rate on the tax computation. It will show an additional deduction that brings down the profits to that 10% rate. It's quite a complicated calculation to do. You've got to look at the patented income streams and the non-patented income streams, work out a percentage, and then split the expenses according to that percentage. It's a complicated process to do, but one that can be quite beneficial to the company, especially if it's deriving a decent level of profits from the patents. It can reduce your corporation tax bill at the moment by nearly half, and there's a lot of talk in the press at the minute about an increase in corporation tax coming. So if Patent Box stayed at this theoretical 10% rate, that would be an even bigger saving potential in the future. And as I just discussed with R&D, we can look backwards first. So this could result in a corporation tax refund for the company. And then going forwards, it's reducing that liability due in the future. Important to note, really, it's not just you claim Patent Box or you claim R&D, and they're exclusive from each other. They can be claimed together. So you could be doing R&D tax relief on a new invention, for example, and you've got an invention you've already achieved with a patent on it, and you're claiming Patent Box on that. You can claim both together. And that leads me quite nicely to some of my case studies. And these are two cases we've got for you today, both claiming R&D and Patent Box tax relief. So this first client is an industrial bags manufacturer. And they're doing it mainly for the transportation of TVs from customers' homes to be repaired. So it's providing additional protection whilst in transit. So we've made the R&D claim for the development of this product, of this bag in effect, and also claiming R&D for its continued improvement, adding further protection layers where required. The patent was obtained for some of the technology that had been used in the product that had been originally developed. So we did a claim for R&D and for Patent Box, and over the last 2 years, they've claimed the client's received circa 60 grand in tax benefit from this. They've been in the system for quite a few years, so this is a reduction in their future tax liabilities, but this is 60 grand that's in the client's back pocket rather than having to be paid over as tax to HMRC. The second case study is an equestrian simulator designer and manufacturer. So they've been, for many years now, developing various equestrian simulators. And each time they develop a new one, they look to try and get a patent on it to protect the invention. So from an R&D point of view, the innovation in the design of the simulators is what we've been claiming for. And then we've been claiming Patent Box tax relief on the profits that have been made from the sales of the simulators to the masses. Just in the last year alone, from a combination of the two reliefs, the client saved 51 grand in corporation tax, a significant saving that has helped them further develop products to increase their business overall. So that's a bit of an overview on R&D and Patent Box tax relief. As we said earlier on, feel free to drop me a question through the chat, and we'll try and answer as many as we can at the end of the presentation. Or contact me directly. My email address is up on screen. It'll be up on screen at the end as well. More than happy to field any questions that you may have outside of this webinar. I'm now going to pass over to Kate Hickinson at Appleyard Lees, who's just going to talk a bit more about patents. Over to you, Kate.
Thank you. Can you see me now? Yeah, okay, thanks very much, Phil. Okay, so I am a patent attorney and partner at Appleyard Lees. To be a patent attorney, you have to have a technical background, so I have got a degree and PhD in chemistry. Although at Appleyard Lees we have attorneys with all different specialist backgrounds. So I handle general chemical work, including pharmaceuticals and more general industrial chemistry. So at Appleyard Lees we specialise in intellectual property. So by that I mean patents, trademarks and designs. We have a number of attorneys. So I am a chartered, that means a UK patent attorney, and also a European patent attorney. We also have trademark attorneys and IP solicitors. IP solicitors tend to handle the more contentious matters, mainly dealing with designs, trademarks and branding, but we do also work with external solicitors and barristers too when needed. We've got offices in Manchester, Leeds, Halifax, Cambridge and at the BioHub at Alderley Park. You have the next slide, please. Thanks. So as Phil said, I'm going to talk about the patent part of Patent Box tax relief. So how do you get the patents that we require to obtain this relief? But just briefly, as Phil just talked about, Patent Box tax relief is designed to encourage innovation and investment in the UK, and you pay preferential low rate of corporation tax on the profit that's attributable to income from patented inventions or innovations. And in order to obtain this tax relief, then you have to own or exclusively license a patent in the UK or another qualifying European patent, and that includes a European patent obtained through the European Patent Office and also in various other countries in the European Economic Area. Next slide, please. Okay. So getting to the patent part, as we said, you have to have a qualifying patent. There are also other qualifying IP rights which are generally applicable to human and vet medicines. So these include supplementary protection certificates, plant variety rights, medical marketing authorizations. They're all quite specialist IP rights that if you want more details of, feel free to contact me. The PATO, the European Patent Office, or various other European national patent offices, and they're ones that have an equivalent level of examination of the patent applications. So trademarks, designs, copyrights aren't qualifying IP rights. It has to be patents. Okay, so next slide, please. Okay, so first of all, what is a patent? So a patent is an IP right, an intellectual property right, and it's a piece of property. So you can buy one, sell one, you can license it, and it relates to an invention. So it has to be something of a technical character. Often that is to do with solving a technical problem. If you've had to solve a technical problem, then the chances are you've got an invention there. And it's an exclusive right to prevent others from using the invention without your permission. But it doesn't give you the right just to do anything. And I'll talk about this a little bit more later. But if you have your own patent, you still have to consider freedom to operate and whether other people have patents that you could infringe. Having your own patent doesn't mean that you won't necessarily infringe other people's. So it has a patent has a maximum life of 20 years from filing. You have to pay renewal fees in most countries annually to keep the patent in force after grant. You can decide to drop the patent at any time. So if after 10 years you think I don't want the patent anymore, you can just stop paying the renewal fees and your patent will lapse. But if you want to keep it to 20 years, then you have to pay annual renewal fees for that time. It's a territorial right, so it's only applicable in the country or region where you have filed for a patent or your patent is granted, and you have to apply for a patent. It's not an automatic right. Next one, please. Okay, so just briefly, what can be patented? Lots of things can be patented. So I've just listed some of the types of products that can be patented. As a chemist, I often work with applications that will define new molecules, new compounds, new chemical compositions, perhaps the use of those compounds. So in the pharmaceutical field, the use of a compound. So it might be a known compound, but it treats a new disease. So the use of the compound to treat that disease. Also second uses, non-medical uses. So compounds or compositions that give you a new effect, that might be patentable. So it doesn't have to be just a completely new chemical compound or composition. We can also patent processes and methods. So a process for doing or making something in the chemical field, that may be a process for making your pharmaceutical compound. Also software and apps. That's a very specialist field as a chemist. That's not something that I handle, but and also kits of parts or combinations. So if you have two or more items that you bring together at the time of use, you can patent those as a combination or a kit of parts. Next slide, please. Okay, so the key requirements for grant of a patent are set out on this slide. So novelty, inventive step, what we call sufficiency, and also a technical effect. And I'll talk about each of these briefly. Next slide, please. So novelty. So first of all, is your invention new or not? And that is generally quite a straightforward question to answer. It's not always black and white. In the field of chemistry, we might have compositions with different amounts and the ranges of the amounts overlap, and there's case law as to whether those overlapping ranges are novel or not. You might have a broad generic scope for a compound, and then you might find that some compounds within that broad scope could be patentable if they're not explicitly disclosed in the broad scope. So that it's not always black and white, but generally novelty, it is more of a yes/no answer. Is your invention novel or not? So to obtain a granted patent, the invention has to be new, and by that we mean that it's never been made public before. So disclosure to only one person outside confidence, or by use in a public place where the invention could have been seen freely, is a disclosure and is enough to prevent a valid patent protection being made available. So the relevant disclosures are written, so publications, literature articles, patent publications, but also oral publications. So it's really important to keep your invention confidential until you've decided whether or not you want to file a patent application. Things like oral disclosures aren't going to be found probably by patent offices. So when your patent application is examined, the patent offices are looking for written publications, written disclosures that are relevant to your invention. But we often find that prior use or oral disclosures may be brought up after grant, so in proceedings where people are trying to invalidate your granted patent. So even though you might manage to get a granted patent, if you've made an oral disclosure, it might come back to bite you later on in the process. Okay, next slide, please. So inventive step. Inventive step is generally a grayer area. Often you can argue that something's inventive, and you can also argue that it isn't. And that's part of our skill as patent attorneys is arguing that inventions are actually inventive over the prior art. But it doesn't always have to be a huge step. Like Phil mentioned earlier, it doesn't have to be a whole new product. Modifications, changes, you know, they are inventive and are patentable. So the way that we look at inventive step is we look at what the technical problem is that's been solved, and then we compare the solution the invention gives to that problem to the closest existing solution that's in the prior art that's been published, and identify the difference, and then ask whether it would have been obvious to the skilled person to modify the existing solution so as to produce the invention when you consider what the technical problem is. I mentioned there the skilled person. So the skilled person is generally an experienced practitioner who has average knowledge and abilities. It's not, you know, the top expert in the field or a professor at the university necessarily. It's an average, somebody with average knowledge in the field. So for example, if we had a chemical composition that comprises components A and B, and that's our prior art, that's what's published, and the invention relates to a composition comprising A plus B plus C. So the difference is obviously that we've added new component C, and we'd need to see what that technical problem, that extra component, solves, and would it have been obvious to add that extra component C to the composition to give the technical effect that it provides. And if it wasn't obvious to the skilled person to do that, then the invention, the new composition, would be found to be inventive. It's worth saying that inventive step is looked at differently in different countries. Sometimes you can get a patent granted in one country and really struggle in another, and even different examiners within the same patent offices can apply different rules and requirements. So it's not as straightforward as novelty often. Okay, so next slide, please. So just a quick example really here, very basic. So if the prior art is a pencil, and we all know that you can use a rubber, and the invention is a pencil where we've actually attached the rubber to the pencil. So is that novel? Yes. The prior art isn't one unit with a pencil and a rubber, but is it obvious? You might look at that and think, yeah, of course it's really obvious, but that's probably applying hindsight. If this hadn't been done before, there is a technical advantage to putting the rubber on the end of the pencil. It makes it easier to use. You don't have to find the rubber when you're writing. You know, there are technical advantages there, so probably that would be inventive. Going back to what I said earlier about the fact that a patent doesn't give you the right to do anything, if you had a granted patent to that combination of the pencil and the rubber, you wouldn't necessarily be able to sell it. For example, if a rubber had been invented 5 years earlier, and that was actually also covered by a granted patent, although you could get a patent to the combination of the pencil and the rubber, you wouldn't necessarily be free to sell it unless you had a license from the patent owner for the rubber. So that's just an example of why having a patent doesn't necessarily enable you to do everything that you want. You still need to consider other people's patents. Okay, so next slide, please. So the other requirement for patentability is what we call sufficiency. And this is basically that you have to, in your patent, describe the invention in enough detail to enable the skilled person to make it work. So you have to tell other people how to repeat the invention. You don't have to have a working prototype before you file the patent application, but there has to be enough detail in the patent application to enable somebody else to repeat it. So this really comes down to the rationale for having patents. If you have a patent, you get an exclusive right. You don't get that for nothing. In return, you have to fully disclose the details of your invention, and that's sort of to help the advancements of science. And so it's you don't get anything for nothing. So in a pharmaceutical patent, you would probably need examples. You'd need to show that you've made the compounds and that they have, say, some sort of activity and that they work how you say they work. Not hundreds of examples, but you need to at least show one example generally. Okay, next slide, please. So we also said that you need a technical effect. I'm not going to go into this slide in loads of detail, but the European Patent Convention sets out in some cases what aren't regarded as inventions, and there's a list here of different things that aren't regarded as inventions and aren't regarded as having a technical effect. But the third paragraph, so it's the third section, says that these things listed in section 2 are only excluded to the extent to which the European patent application or patent refers to the activities as such. And so in this list in section 2, we see that it has programs for computers. And the fact that that's listed there doesn't mean that you can't patent anything to do with computer programs. If there's a computer implemented invention, it can be patented if it includes a technical effect. So whilst there are certain things that are listed and regarded as not being inventions, there are ways around this, and things like software patents really require a specialist patent attorney. It's not in my field, I wouldn't advise on it, but software still is patentable. Okay, next slide, please. So how do you obtain a patent? Well, first of all, we have to prepare the patent application, and the patent application consists of a description, which has to be enough to enable the skilled person to work the invention. As I said earlier, at least one example or a disclosure of a preferred embodiment, and the claims. Now, the claims define the scope of protection, so that's what you look at when you're considering infringement. And we try to draft the claims, as patent attorneys, we try to draft the claims as broadly as we possibly can whilst meeting the requirements for patentability. And the claims can change between the application being drafted and it actually getting granted. There's also an abstract, which is just for information really to help researching. So we get the patent application drafted and then it's sent with forms and fees to the relevant patent office. So for example, the UK IPO or the EPO. Okay, next slide, please. So just briefly, the process of filing for a patent, it's quite a complicated process and I'm not going to go into it all here, but we basically, if we've got UK inventors, then we would usually file the first patent application at the UK IPO, it's really important to consider inventors and where they reside and their nationalities, because some countries have requirements as to where you have to first file your invention. So that's something that always needs to be considered. You basically get a first filing date there, and within 12 months you can file in other countries or regions, and what we call claim back priority to that first date. So it enables you to file a first application, then you have a year to decide whether you want to proceed in other countries. And if you do, you can then file other countries and use that first date as your date by which patentability is judged. But if we were going just with a UK patent application, after 18 months, so at 1.5 years, then your patent application is published. So patent applications are secret for the first 18 months, but at 18 months, its details of your invention are made public, and the patent application is published. We then need to request examination, and the Patent Office looks at your invention to decide whether or not they think it meets the requirements of patentability and whether you can have a patent granted. We often get what we call an examination report, and there might be objections to the claims, and it's our job as patent attorneys to overcome those and get a patent granted. So at the UK IPO, usually within 4 to 5 years, you would have your patent granted. Next slide, please. So the costs. Obviously, there's a potential with the patent box to claim money back, but you have to pay some money to begin with to get your patent. So in the UK, these are just rough costs, really. It depends on the subject matter. It depends on the time taken to draft a patent application, but we're looking at usually £3,000 to £6,000 to prepare and file a UK patent application. And then there's other costs up to grant. As I said before, once your patent's granted, then there are annual renewal fees, which increase with the number of years with the age of the patent. But the UK process is pretty low cost and quick compared to other countries or regions that you might want to file in. So can I have the next slide, please? So looking at costs for Europe, if you were going to file at the EPO, the European Patent Office, then we have similar costs. I would say it's usually more expensive. The EPO fees are higher. UK Patent Office fees are quite low compared to other patent offices. Once you have your European patent granted, you have to do what we call validate it in different countries in Europe where you want to have your patent, and then it becomes effectively a national patent in those countries. So then you do have renewal fees in the countries where you want your patent to stay in force. At the European Patent Office, there's also an opposition procedure. So after your patent is granted, then a third party can oppose its grant, and that can be quite an expensive procedure if that happens. It happens for quite a low number of patents, but if your patent's opposed, or if you wish to oppose somebody else's, that's a fairly expensive route. Okay, next slide, please. So just some thoughts around Patent Box. So actually, although some of the fees might look quite high, the UK IPO might be a more attractive route to use Patent Box than the EPO because it is cheaper. It also can be quicker to get a patent granted at the UK IPO, and sometimes it's easier. Sometimes it's easier to convince the examiners that the invention's patentable. For Patent Box, it can be worth having a patent, even if it's one that can be easily worked around. And we would need to think about the scope of protection. It might be worth just getting a fairly narrow patent granted that goes through the prosecution, gets granted quite quickly, and is still useful for Patent Box. So patents don't have to be that too expensive to obtain, and we can minimise the cost by thinking about what it is that we're trying to protect in a patent. But it's just worth also remembering that patents can be opposed or revoked after grant. Just because your patent's granted doesn't mean it's necessarily valid. Okay, next slide, please. So just quickly, other reasons to file patents. I won't go through all of this, but obviously there are other reasons to file for patents other than just the Patent Box. And then next slide, please. So also, we don't, as patent attorneys, obviously we like filing patent applications, but it's not always appropriate to file for a patent. So there might be times when you actually want to keep your invention confidential. As I said before, your patent application will be published by the Patent Office at 18 months. So details of your invention will be made public. So you might want to decide to keep it as a trade secret. If you've got an invention that's very easily copied, circumvented, you might decide not to, although for Patent Box you might decide actually that's fine, we want to use it for that. Don't file too early, so if your invention isn't developed enough you might not meet the requirements of sufficiency and your patent might fail. So it's really good to talk to a patent attorney about the timing and when you've got enough information to file a patent application. And if you have an invention where the patent would be difficult to enforce, that might be another reason not to file. Sometimes with chemical processes, it can be very difficult to know whether a third party is using the same process as you and to get the information to know whether they're actually infringing your patent. So you might decide to keep it confidential. Okay, next slide, please. Sorry, I'm 1 minute over. I've got one more slide. So just worth mentioning while I'm here. So as I said, trademarks, designs, copyrights aren't qualifying IP rights for Patent Box, but there are other IP rights. So trademarks and designs. I don't generally deal with these, but we have attorneys that are specialists we have trademark attorneys and specialist design attorneys. For the designs are about what something looks like as opposed to the technical nature of the invention. And next slide, please. So that's me finished. There's my details. If you have any questions, please put them in the chat or feel free to contact me at the end or afterwards. Thank you. So now I'll pass over to Paul and Ian from Bathgate.
Good morning, everybody. By way of a quick intro, Paul and I both work for Bathgate and we help businesses source finance. What we're going to do today is a quick overview of loans against R&D tax credits, finance against software, and some alternative finance solutions. Next slide, please. R&D tax credit loans can be submitted alongside an R&D claim or can be submitted beforehand. When the loan is applied for at the same time as the claim is submitted, typically the loan is for 70 to 80% of the R&D tax credit. Amount is between 25 to 250,000. In some instances, a personal guarantee is required. I guess the key is it provides certainty of cash flow. So for businesses who are reliant on HMRC payments, which could be 6 to 8 weeks, it could be longer under the current climate, a loan provides the certainty that the funds are available. Next slide, please. In some instances, a loan can be submitted before, a loan can be applied for before the claim has been submitted. In that instance, the loan is for 70% of the R&D tax credit. It's a minimum of 100,000. And the key benefit is that it can be financed or can be used to help finance projects, or it can be used to increase the R&D spend. Increasing the R&D spend obviously then leads to additional R&D tax credits. Next slide, please. The funders will have key criteria, and that is limited company, registered in the UK, business needs to be loss-making or marginally profitable, mainly because for the funder to get the loan repaid, they need a cash payment as opposed to a tax adjustment. And also the funders have their own due diligence. Next slide, please. So due diligence, what are the funders looking for? Firstly, they're looking to see that HMRC are likely to make or approve the claim, and that is part of the due diligence will be previous history, successful claims, or actually it will be professional advisor support. So for example, Mitchell Charlesworth providing the evidence that a claim is going to be made, provide a report and provide details of that claim. On the business viability side, the fund is looking for no HMRC arrears, and also for the business to be able to demonstrate positive cash flow throughout the loan. That could be through the bank statements, through cash flow forecasts, etc. Next slide, please. So R&D tax credits, every business has their own sweet spot. It really depends on the business's needs. So for example, some businesses who've already registered their accounts have submitted an R&D tax credit claim. You could argue that it's potentially too late to seek funding. Whereas for some businesses, actually those 3 or 4 weeks or the delay in the HMRC making payment can actually be essential to the business and can fund a critical cash flow gap. And as I say, ordinarily it's 6 weeks, 6 to 8 weeks for our HMRC to make the payments once a claim's been submitted, but it can be longer, especially in this current climate. Some businesses, you could argue, the ideal timing to actually apply for a loan is whilst they're preparing the accounts, preparing the R&D tax credit claim, because at that moment in time, you're looking at a loan for 2 to 5 months, and that could be ideal for the business's cash flow. And then taking it to the extreme, businesses could be applying for a loan when the actual year ends, they're approaching the year end, and in that scenario, they haven't yet submitted the R&D tax credit claim. It could be 3 to 6 months away. So actually a loan could be up to a 9-month period. And again, for some companies, that could be ideal because it just adds to the cash flow, and as I said before, helps them to fund projects or helps them to meet additional R&D tax credit expenditure and in turn increase their R&D tax credit claims. Next slide, please. So we finished, and it was a very, very quick overview of R&D tax credit loans. And Paul and I would be very happy to follow up at a future date in more detail. But what we want to do is just give you a flavour at this stage. Likewise, very similar on the intellectual property finance, very, very basic overview at this stage. In truth, it is quite a specialised sector, and we deal with one funder in particular. That funder will finance against business critical software, and it'll comprise of the ownership of the software being transferred to the funder and then licensed back to the business. On completion of the loan, the license is transferred back to the original company. In terms of the IP finance, it's, as I say, it's quite specialised. So the amount starts at a minimum 250,000. It's over a 3 to 5 year period. What is key is valuation of the software. And what can help on the valuation of the software is the R&D expenditure, is critical contracts. So again, what is essential is support from business advisors, such as the guys on the panel. Moving on to the next slide.
This is where I come in. So I'm going to provide.
Sorry, Paul, just before you do so, the reason we're providing the alternative finance solutions is because the R&D tax credits and the IP funding doesn't always suit every company, hence the fact we should provide you some alternative funding solutions. Over to you, Paul.
I thought you were going to steal me thunder then. Thanks, Ian. Yeah, so I'm going to provide a sort of a brief overview of some of the alternative finance solutions where Bathgate are supporting businesses currently. Over the past 12 months, Bathgate have been busy supporting businesses with CBILS funding. I think to date we've done over 20 million in terms of funding sourced for businesses, and this is an ideal solution. It's a competitive, flexible solution for those businesses that ultimately qualify. Another area, invoice finance. This is an ideal solution for businesses that are growing. Loans will become increasingly difficult for lenders to facilitate in the coming months due to the bounce back loans and the CBILS loans repayments kicking in, which will have an effect on the ability to provide debt service. So the invoice finance will provide a revolving facility where funding levels will increase in line with sales, and we at Bathgate have an extensive expertise in this sector. Likewise with asset finance is another area where we have a number of specialists who support businesses that are looking to purchase assets, and these assets will provide a return on investment over a sort of 3 to 5 year period. I think all of these above solutions are ideal to consider at the various life cycles of a business. And all we would say is that, if you've got seeking any advice or any support in any of these areas, then please do contact Ian and myself, and we'll be happy to help.
think that's back over to you now, Phil. We've it's a very, very quick overview.
Thanks, guys. Really interesting to hear all the different things available and a little bit more detail on the patents and how you obtain that. So thank you very much. I'm just going to put our contact details up on screen. We've had a few questions come through during the webinar, but if you've got any questions in particular for the guys, Ian and Paul, and for Kate and for myself, please do contact us using those contact details on screen. There's a few questions that have come through for me. I'm not sure for Kate and Ian and Paul, but for myself, one question in particular about R&D and the interaction of grants. So the short answer is yes, you can claim R&D even though you've had a grant. You're just restricted potentially to the RDEC scheme rather than the more beneficial SME scheme. So the funds used from the grant, they would qualify potentially under the RDEC scheme, but that provides a 11p in the pound benefit compared to the 25p in the pound benefit under the SME scheme. So definitely still worth considering, even though you have got that grant. I had another question for you on timescale. How quickly is it to turn around? And Ian, you touched on that in your bit. The HMRC take about 6 to 8 weeks to process a refund. And then from our side, it can be done as quickly as a client wants or as slowly as a client wants in that sense. If they've got other things going on, then we can fit in. If it's a quick turnaround and a quick deadline needed, we tend to try our best to try and facilitate that for our clients to make sure that they're maximising their benefit. I had an email through just before the webinar actually from HMRC advising on the current timescales, and they're working to about a 5-week turnaround at the minute. So they're looking at claims that were submitted on the 23rd of December or before the 23rd of December. So in effect, you're talking around a 5-week turnaround from HMRC at the minute. Had quite a good question on the structure and what business structure you need to be to claim the relief. The relief is specifically a corporation tax relief, and therefore if you're a partnership undertaking R&D activities, you don't qualify for R&D tax relief. But that might lead to a question of, well, should you be operating as a partnership? Is that the most beneficial route to be undertaking? Bearing in mind the relief that you can possibly get from R&D. So possibly an additional question needs to be had on structure of the business to link in with R&D there potentially. And I had a final question of a company that seems to be sponsoring a uni project. I would want a little bit more information on that. So I would like to contact you outside this webinar just to obtain a bit more information and potentially provide some advice from there. I don't think we've got any other questions that have come through. So I'm going to wrap up. I just want to place my thanks to Kate, Ian and Paul. Thank you very much for joining today. It's a really insightful discussion and information provided. So thank you very much for that. And as we say, our details are up on screen. So please contact us with any questions that you may have, any advice that you need. We're more than willing to help as much as we possibly can. So thank you very much and see you soon.
Thank you.
Thank you. Bye.